mindless artists isn't about appeasing the crowd. Rather, it's about tending to the broken parts inside of ourselves. We create things as a reflection of this struggle, to study our perception of self. Ben wave isn't necessarily a thing you achieve. Rather, it is a state of mind which you constantly strive toward. This all comes from an understanding that ideas aren't static, but fluid, like water. Be like water.
All right, my friends, welcome to our August 5th edition of This Week in Crypto. I'm your host, Brian. We may be joined in a bit by Maxim, but I have plenty to cover this week. As a quick reminder, we are not here to give investment advice. We are here to go over some of the key data points that are showing up on Santiment platforms right now, based on our top tools and metrics. So with that in mind, we can jump into what has been a very up and down week, to say the least, if you are a top cap watcher, and a very good week if you are more watching or investing in the mid cap and small cap assets. We can see very clearly here there was a big differentiation between the top caps going up to around FTX token, and how performances were more or less extremely flat. And then once you get to near protocol and beyond for most assets, quite large gains, which is quite typical when you see a rally, right? You see, Bitcoin be the first asset to really turn positive after a long flush down. Then the Bitcoin gains start to get transferred into a lot of top caps. You saw Ethereum last week really going off. Uniswap has been on a huge run. And now a lot of the gains are happening on the lower end side. It certainly doesn't mean that after this part is over, we're going to see a big, correction again. But we have seen a lot of instances where Bitcoin has a nice run, then Ethereum and some altcoins, and then these smaller cap assets. And it tends to go in that order when you do see recovery, like we've seen since very late June. So that said, we're looking for whether or not the markets are getting overheated, as the image and the title kind of implied. And we'll have a lot we can touch on as far as MVRV, some of the key models that are happening, what whales are doing, top transactions, things of that nature. But as far as a few gainers have gone, we saw Binance Coin was a standout among the top caps. Near, as I mentioned, Flow, Filecoin, Chiliz, and Lido DAO token, just to name a few. We also see over here Blockstack and Engine Coin had pretty good weeks as well. So what's interesting is that social volume is all over the place. We saw that Bitcoin is actually being discussed 11% less than it was the week prior. Ethereum just a little bit more. Binance Coin, despite it being up 10% as one of the few big gainers in the top cap category, it's actually down 19% in discussion. And that actually makes a lot of sense. The ones that are being ignored the most are often the ones that see surprising pumps, right? Because not a lot of people are paying attention or being invested in that particular asset. So it goes up with much more ease and less resistance than others. Cardano, we can see also a big drop in social volume, though that asset has not really picked up yet. It's down 3% at the moment, but keep an eye on that as another top cap asset that seems to continue seeing less and less attention being given to it. Other than that, yeah, it was kind of an up and down week, as I mentioned. Altcoins, there were a few standouts, but after so much volatility, this was one of the more boring weeks that we've seen in terms of price returns in quite some time. So we'll definitely go over what's been brewing. Obviously, the FOMC made another interest rate hike around 8 to 10 days ago. There's another one expected to come in September. Most people are assuming there will continue to be another interest hike in terms of the percentage of interest that is being paid from corporations in the US. And that will definitely have a factor and probably shake up the markets yet again when that occurs. But right now, it's kind of calm time before things start to get fearful and opinions start to pop out of the woodwork in late August going into early September. So we've got, a few weeks here where prices can kind of move without as much inflation concern as we've seen throughout the year. Okay, that said, I encourage you guys to ask questions freely. I'm just going to check how many are in the chat right now. It looks like 6 are in the chat, so thank you to the 6 of you here. Like I said, any questions you have, I see ER Berg has already popped in with a quick ADA request. We can definitely go over Cardano today. I think that would be good. We haven't done so in quite a while. And any other questions, just pop up, and Balresh here will read a few altcoin requests toward the end of the call. So yeah, MVRV, let's see where we're at here. As the thumbnail showed, there are some interesting things going on with the fluctuations of average trading returns right now, where we can gain a lot of alpha from checking that out. Big spikes here on the Cardano side, coincidentally, back in March, and then notice how it actually got hit the hardest just a couple months later. As of now, Cardano is just above positive. It's actually one of the better outlooks of the top cap assets because it's only seeing around a 4% gain among average traders on the 30-day time frame basis. Meanwhile, for contrast, take a look at Binance Coin. It's actually off this axis. It's sitting at plus 34% over the last 30 days. So that would be a big concern because we typically like to look at about 15% or so as the cutoff before things start to look pretty overheated and in the danger zone. So you can see Binance Coin is above it, Ethereum is just below it, and then Bitcoin and Cardano are in much more reasonable areas because they've performed much flatter over these past 30 days compared to Ethereum, Binance Coin, and many altcoins out there. Moving on, let's take a look at some of the actually, before we do that, to expand on MVRV, excuse me, I wanted to quickly show how the danger and opportunity zone divergence is looking right now for many of these assets at the same time. What this is doing is combining the time frames of 1, 7, 30, 90, 180, and 365 day time frames to give us an idea of the average trading returns and performances without having to pinpoint one interval as the best time frame. So because it's been a good run over the past 30 days or so, you'll see that most of these first 3 bars on each asset are showing they're a little more toward the danger zone right now because there have been a lot of gains, and gains eventually have to be contrasted with some losses. And long-term wise, you can see these dark lines are mostly in the positive range. That's because they are closer to an opportunity zone, because despite the 30-day and 7-day and 1-day MVRVs being so scary right now for a lot of assets, especially something like Binance Coin that we just checked out, the 365 and 180 day divergences are still very much showing there's some meat on the bone. So short-term wise, as I'll illustrate with just Bitcoin really quick, short-term wise, there can be a little bit more concern because we're in positive range, but check out the 365 for comparison here. And I'll put it on the same ratio so you can see it together. We'll just say 40 and negative 80. Actually, sorry, 0.4 and negative 0.8. There we go. Do the same here. 0.4, negative 0.8. So now you can see, ignore this line, we'll take it off again. So the pink is above the 0% line where the danger zone was right up here. But check out this red zone way down at negative 34%, showing the long-term holders are still way, way in pain, meaning there is more likely to be a long-term gain. And short-term wise, we're just about even because it's not anywhere near the danger zone up here. So that's actually a pretty good outlook for something like Bitcoin. You just want to be careful. Like if you shift this to Binance Coin, for example, notice we're back at that plus 34%. but the long term, again, is still in negative territory. So short term concerns, long term looking very juicy because we're in such a pain area for the average trader still on the 365-day time frame. So hopefully that makes sense. And I definitely recommend checking out this MVRV opportunity and danger zone divergence model. It can give a lot of insight as to which assets are showing they're getting overheated, like we're seeing with Celsius, OKB, and Uniswap right now, and which ones might have a little bit of solace coming up because they haven't been showing as much gain. It's basically like telling you when to buy low and when to sell high based on the average trading return. So it's not just true profit and loss of the asset, it's actually showing based on trading returns, all the active traders within the 1, 7, 30, 90, 180, and 365-day timeframes, which ones are performing too well and which ones aren't performing well enough in a zero-sum game. So AMP, Loopring, XRP, and Unised Leo are among 4 that are actually showing there is some quote-unquote meat on the bone there. All right, so that said, now we will go into some Bitcoin metrics, talk about some of the big indicators that will control how the rest of the markets tend to perform over time. So we'll start with circulation here as we typically do. This red line shows the amount of unique tokens moving on a day-to-day basis on an average smooth 30-day time scale to show when it's starting to rise, when it's starting to fall. And right now it's starting to fall a bit. Kind of concerning. The red line is showing we're down to about 159,000 unique tokens moved per day. It hasn't been this low since we've gone back to early October now on the average time frame. So that's a major concern because even back here in mid-June when we saw that big drop, we saw a big rise in circulation because everyone was polarized and reacting to the major price movement. Some wanted to buy the dip, some wanted to get out so they didn't lose any more. And that typically can actually help Bitcoin in the long run because polarization and increased activity is what helps churn prices up and down. And now people are starting to get a bit stagnant because there might be some non-believers on this short-term rise, and it's causing the amount of tokens being moved to stagnate out of fear, out of kind of this more hodler's mentality where it's like, I'm just going to do nothing until I see another huge drop or another huge rise. And we can see it illustrated in terms of divergence right here on our NVT analysis template. And it's showing us on average, compared to all the other months, exactly how much token circulation we're seeing compared to the current market cap. And it's not looking so great because of the fact that we just saw the token circulation was dropping. August has started, just the first 4 full days at least, in a bearish divergence territory after being in semi-bearish last month and then bullish the 2 months before, semi-bullish before that. So a bit of a change of pace here. I would be concerned until circulation starts to pick up because we see historically most of the time when we start to get into these red zones, that's when prices sink. There and there. This one we saw a rise, yes, so it's not always going to be reliable, but it wasn't much of a rise until we got into semi-bullish territory, and boom, that's when we had blast-off territory. Then we got into bearish again, things started to dip, lots of volatility, and then we saw prices drop way more than the model dictated we should, so we were seeing bullish territory for quite a while until we finally got a bounce, but it wasn't much of one. And now August is sort of flat so far with not a lot of circulation to back it up. So that's what's going on the Bitcoin side. While we're here, we can take a look at Ethereum and even a few other ones. Ethereum is also showing a lot of bearishness. We can see after just 2 months in May and June of some bullish circulation, it's back in bearish territory just like it was in February, March, and April. And with declining circulation there, we have to ask ourselves the same question. Are we getting enough unique movement of all of these tokens to justify a bounce back to, 2,000 plus, let alone 3,000 plus for Ethereum? That's going to be a concern. We can see what it looks like on Sandbase really quick. And you see kind of a similar downturn on this red line here, where the amount of unique Ethereum is at about 866,000 per day. It was up, looks like at a peak. Actually, the peak was just about a month ago at 1.14 million. So a big drop down just over the past month here. And as I mentioned, we can look at a few others even. Matic looks bullish. Interesting to see that. Matic has been on quite a run as of late. Litecoin, bullish. Chainlink, semi-bearish because it's actually rebounded a bit without much circulation help. Ren, semi-bear. Actually, no, the date wouldn't be updated for Ren. You can see how it's on May. So I have to update those charts. These last three, yeah, XRP we do have, and it's showing bullish, interestingly. So ignore Ren and Augur, where I don't have the full data updated yet, but everything else is up to date here. And you can get all of these models, by the way. Just check out our Santiment Academy, where the links are going to be available. And you can make a copy of these, go to extensions, make sure to download Sandsheets, and then plug in your API key. And you'll just give it a browser refresh, and usually all the data will pop up for you. Just be patient, give it a minute or two to load. And you can check on all of these, the MVRV, the NVT, whale transactions, which I may get to in a bit. Check it all out on a daily basis. It's tremendously helpful. All right, so moving back to some Bitcoin metrics now. Just check if there's any comments or questions. Is it possible to compare first week circulation data for the last 4 months? First week circulation data. Not sure I quite follow. If you could clarify, Berg, that might help. First week data, do you mean the first week of every month? Or do you mean looking at circulation on a weekly basis, like so? Whoops. So we could do this and look at the weekly like this, but I'm not quite sure if that's what you're asking. All right, moving on, daily active addresses. Sort of the same as circulation right now. It peaked back here in mid-May, and ever since then, things have been dropping a bit. The amount of unique addresses moving on the network are declining and are down to a 6-month low right now. We can back it up just a bit. Look at the last year. And we see that the last time the average amount of daily active addresses was this low was way back in early September. So to me, that's a concern. We definitely are moving in the wrong direction in terms of the amount of unique amount of addresses interacting on the network. And when there are less addresses, that implies that future movement might be a bit stagnant due to the limited amount of participants on the Bitcoin network right now. Things can, of course, change very quickly, but in a vacuum, you're going to be happier seeing things rise as we were seeing leading up to the eventual all-time high back in November, and be a little more concerned when things are dropping as they have been since mid-May. Next up, we touched on MVRV already. Short term, things are looking very slightly concerning, but long term, things are still looking very good. H consumed, not much has happened over the past week. Supply on exchanges is down still, which is good. Over the past year, things peaked up at about 13.5% of Bitcoin supply on exchanges, dropped as low as 9.4% on July 11th, just about 4 weeks ago, and has crept up just a tiny bit since, sitting at about 9.4% now. In a vacuum, we just want to see the supply and exchanges stay down, or ideally continue dropping, because that would imply there's less and less risk of a continued drop or of a continued sell-off on exchanges, because there's logically less Bitcoin to sell off on exchanges. All right, let's look at some whale data now. I've got this chart up, which will show both the Tether supply and what the whales are doing there, and the Bitcoin supply and what the whales are doing there. We'll look at Bitcoin first here in the gold line. We can see that 6 months ago, we were sitting at about 48.7% and are now down to 46.05% held by addresses with 100 to 10,000 Bitcoin in those wallets. That's a big drop, and it's not surprising to see that prices have followed. We can show over time, going back like 3 years, that the way these whales behave really foreshadows where prices will go next. Going back to April 2020 or so, just about a month after Black Thursday, they started to rise massively. Eventually, the price caught up, especially here in October. That's where the run really started to ramp up. And it continued all the way until April, where there was a big sell-off. About a week or so after they topped, that's when the price topped and dropped. Then the accumulation began once again in mid-May. Big climb up as prices recovered, all the way up until late October. And then 2 weeks later, that's when the all-time high hit. And then the price followed down with what the whales were doing. And it's been falling ever since. Now, very short term, looking at the past 6 months, yeah, we see just a very slight potential climb happening. We've seen these teases, though, plenty of times before. You know, we had a slight rise here a month ago. We had a slightly bigger rise in late June, where that was actually right around the bottom and prices started to recover. We saw a pretty big rise in the first week of June, but that didn't really amount to much. So really what we're looking for is something more sustained, something that will actually show the whales are accumulating for more than, you know, a week or two at a time. And if and when that happens, that can be the signal that we're waiting for, that those top holders are finally, you know, loading the chambers and getting ready to really push up the price. And this is a whale's playground, as we've implied many times before. When the top holders decide that they're ready to bring up the price and put a lot in their wallets, that's when prices will usually follow their lead, given enough time to elapse. Usually it's, you know, 1 to 3 weeks after you'll see a reaction in price. And for smaller assets, it can be immediate. So that's the whale end of things. Let's also look at Tether, the top stable coin in crypto still, even after its major, you know, news that happened earlier in the year, the depegging down to 95 cents. The market cap is still the strongest, even larger than USDC, DAI, TUSD, all of the other competitors out there, BUSD as well. So the supply of Tether held by these whale addresses holding between $100,000 all the way up to $10 million, it peaked here on May 8th, where they were holding about 34.9% of the supply. Then we saw the depegging of Tether's price around here, and prices dropped off a cliff. Or I'm sorry, the supply held by them dropped off a cliff. Immediately went down to 30.7% here. And notice how it happened as Bitcoin's price was dropping too. It stayed flat for a little bit, and then look at how it started to decline even right before the big Bitcoin price. So there is some argument that the Tether whales in this tier can lead the price just like Bitcoin can. So that's why it's important to look at these two together. So further drop off, this was very gradual, and it's still happening now. They're holding the lowest supply at 27.7% since, if I go back to 2019, so right about the 3-year low here, about August 6th or 7th of 2019 was the last time they were this low in supply held. And at that time, prices were only at 11.4, 11.5K for Bitcoin. So Bitcoin's whales are still a little bit above that. The last time they held this low was May 2020. But regardless, we'd like to see these lines moving in the right direction, and they are clearly not right now. So that's something to be concerned about. And that's really it for the two primary whale charts that we want to see, but we'll definitely look at Cardano and a few others toward the end of the call. Quick check on questions. Yeah, today is kind of July recap, but we're also looking at what the current outlook looks like for the first week of August as well. 4 months back, I still am not quite sure what ER Berg is requesting. Yeah, just let me know, and I'll keep on looking through some of the Bitcoin metrics in the meantime. Exchange flow balance, not a lot happening as we saw with the supply and exchanges. It's kind of flattened out over the past couple of weeks. The last really big spikes we saw were in mid-June, and these were good signs because we had massive outflows, indicating that there was a big chunk of coins being taken off of exchanges and put into cold wallets. And sure enough, that was right around close to the bottom. Things started to flatten out, eventually rise. We saw a similar thing happen right at the end of January, beginning of February. Huge outflow, the largest of the last year, and then prices rose for the next couple of months, really. What we want to avoid are big inflow spikes like this, showing there's a whole bunch of Bitcoin jumping back onto exchanges, because that indicates there's a risk of a big sell-off around the corner. Network realized profit loss is more or less neutral right now, not much to say there. Development activity is looking healthy, not much to say there. Now let's take a look at some of these social metrics here as we dive into one of Santiment's most popular sides of the platform. So we look at social volume. After a huge spike that we saw about 4 weeks ago, things have died down quickly. Remember that this happened pretty much right at the bottom, which is very often what will occur. You'll see the big spikes happen, usually right after a big drop off or a big spike, and then price direction changes happen. Sometimes they happen right before a big price direction, which is great. That's what you want to see to get some alpha. Sometimes they'll happen right at the top. But it really depends on the asset. It's even more visible for assets that really aren't talked about much unless there's a big price spike or drop. But for here, with Bitcoin, it looks like social volume is starting to fade and be talked about a little bit less. If we take off volume and only look at dominance, I'll draw a line here indicating the 20% mark. And this is essentially where we are feeling healthy if it's above this line, or a little concerned if it's below this line. Because there is not as much discussion related to Bitcoin as we were seeing, it's going to be a bit more concerning, because everyone is beginning, I wouldn't say everyone, but an increased amount of people are beginning to be focused on altcoins because they've had a good run over the past week, as we showed, whereas Bitcoin, Ethereum, they were a little more boring. But as long as we're below here, it's going to be a bit scary. You'll see that the bigger drops tend to happen when social dominance is low, because people are getting euphoric about S coins and things that don't have as much pull on the overall market and its longevity to continue rising. So we want to avoid, especially if we get below 15%, that's when things really start to get a little worrisome. So we're hoping to see that social dominance toward Bitcoin can recover soon. It's just been a much more boring asset for many people. And that's why the focus is beginning to veer again toward assets that are less productive in the overall growth of the cryptosphere. All right, weighted sentiment. Now, this is another important one. I'll move this over to weekly. I feel like it's a little more productive to look at the long-term timeframes for weighted sentiment. And we can clearly see that when there's big tops in prices, it's correlating with a lot of euphoric feelings, people that are FOMOing in on big rises like we saw in mid-October, even right after the all-time high. People thought this was a slight dip where they could get cute and buy in, and they really got burned pretty badly. And then you'll see when things get negative, that's where things can actually turn around a little bit. Obviously not the case here. We saw, even when things were negative, we saw a continued drop off. But after a little bit of back and forth, things got negative again, and these people actually got rewarded. This euphoria spike was very interesting. I think there was some spam bots going on here, which is why this part was a little bit clouded. But overall, we've been in mostly negative territory since the final downturn that happened in mid-June. And right now, again here in the first week of August, big negative spike, showing that people are not really believers, or Bitcoin has just become kind of boring to them, so they're not commenting at quite the rate they were toward Bitcoin as their focus shifts toward altcoins and all sorts of other assets that are making up ground after their big drops that were even worse than the one Bitcoin saw over these past 8 months. So weighted sentiment is actually looking good if you're a bull, because the perspective toward Bitcoin is negative right now, and that tends to be when we see the most price bottoms. We'll skip this for just a moment and get back to it. Whale transaction count. It's continuing to go a little bit down. It's kind of flattened out a little since late June or so. But overall, this isn't necessarily an indicator that, when it's high, that's when prices go up. It means that there are more, big transactions happening when things are high. But we can see when it was at its highest, that was actually when we saw the correction occur around the all-time high. So it can go both ways. And the best way to really look at this is to combine it with that supply distribution chart I showed. And when there are big whale transaction spikes, if you compare it to, what that $100,000 to $10,000 Bitcoin address tier is doing, if they're moving up when you see the spikes, that usually is an indication they're accumulating. If the line is moving down with these types of spikes, that's a sign that they're dumping. And the largest one here, this occurred as whales were dumping. So that was a sign to be a little worried even after this big drop. But overall, it's mostly flat right now. We'll definitely get into some whale. Actually, let's look at a few really quick here. I just want to show that there have been some pretty big whale transaction spikes happening for some other top 100, 150 assets out there. For starters, you can see Phantom right now. I kind of want to illustrate these. Phantom, Liquidity USD, True USD. So these are stable coins, but Curve and Phantom look like, as it refreshes here, but Curve and Phantom look like the ones that are seeing the most whale transactions. Wi-Fi is also getting a pretty big uptick. So really quickly, if I switch over to that, we'll just reset our charts here. Again. Type in whale transaction. And we look at just the last month. So not a whole lot. It looks like 4 hours. Yeah, it looks like, so the current bar is seeing about 5 big whale transactions, and we're only halfway through the bar. So it's projecting that it'll actually be up here, which would be around a month high. And that's why you see a big bar, because what this model does is it's actually going to help project the future based on the trajectory of how far in the 4-hour bar is, and tell us when things are starting to get really hot. So Phantom is high. We can also look at Wi-Fi, as it's mentioning. And it's interesting, we had the big spike here at the end of July, but it is still projecting that this spike will be up here as one of the bigger ones. So keep an eye on that, because as we saw, when prices were moving up, that's where the big whale transactions occur, and then the big drop off occurred. So this can more or less, when you see a big spike for an altcoin, it's going to kind of dictate when a price direction change is going to occur. With the higher the bar, the more confident you'll see a price direction change. Even here, the short-term price direction change, this was more of a long-term price direction change. So keep in mind that we have that whale transaction model available. As of now, things are mostly calming down for a lot of altcoins, but keep an eye on something like, it looks like after the refresh, Phantom, Curve, Liquidity USD, True USD, Wi-Fi, Quant, Nexo, Gala, among many assets right now, showing some interesting signs. Anything above 50% means there's more whale transactions going on than usual. Now, on the funding rate side, it is looking pretty neutral at the moment, which is surprising. I actually thought that there would be a little more euphoria right now than there is, but it looks like people are keeping their expectations tempered, and the bears, who have been very hesitant over the past few months, are continuing to not believe the hype going on right now, and the rebound, to 23K and beyond for Bitcoin. I think it actually got right around 24K at the top. It just doesn't seem to be believed, and the usual euphoria that comes from a big rise like we've seen over the past month, I wouldn't say big for Bitcoin, but at least an adequate rise of plus 18, 19% or so, that really hasn't been followed up by this blue line rising up into long territory. Meanwhile, same with altcoins. Even though many altcoins have been rising pretty fast, altcoin funding rates are more or less neutral too. So that really indicates prices can break either way, and there isn't a ton of fear or a ton of greed happening. Now we can see for a few assets like Axie Infinity, Bancor, Bitcoin Cash, Cello, Small Love Potion, there's a few assets showing a high degree of shorting happening right now. So those could be potential things to capitalize on if you're really trying to get your timing precise, because when there are shorts, there's a higher likelihood of some short liquidations happening that can basically add rocket fuel to the price and have it bounce up higher than other assets. But there's no guarantee that the short liquidations will happen. The further down they go, especially if Bitcoin's funding rate is in big short range, while other altcoins are in mega short range, that's when you can really realistically expect that a lot of short liquidations can occur, and a big price bounce can make a lot of those altcoin traders very happy. All right, back to Sandbase here. I want to quickly compare the ratio of transactions in profit to loss to see where we're at right now. Back it up to the last year. And it's interesting to see Bitcoin here in blue has been more or less flat, at least since late July. But to start this week, we're seeing a pretty large ratio of profiting happening at the moment. And that's telling me that there might be people that are just taking the profit that they got from here to here and calling it a day, and they don't want to wait for potential collapse in price or a potential continued rise. They're satisfied with the past 4 to 5 weeks of mild gains happening. And that's why we're seeing right around the same spike that we saw in mid-March, right when there was a price top. So that's going to be a concern based on a very short sample size of this week so far. Meanwhile, Ethereum is continuing to see a higher ratio of profit than they are loss. And that's also a bit of a concern. The biggest spike for Ethereum happened right here, right about a week before its all-time high that coincided with Bitcoin's all-time high. It nearly hit $5,000. And Ethereum had its second largest one here, which coincided with its local top right alongside Bitcoin's. And right now, we're going to have to just wait this out and see if this week starts to neutralize a bit or if it stays high. And if it stays high, that's going to be a bit of a bearish signal based on history. When we see these big high spikes before, that tends to be when the tops occur. We'd rather see that there is a larger degree of loss transactions happening than profit transactions. All right, so we're about 40 after. Thank you to the 11 or so in the channel to continue watching. Why don't we take a few questions now and look at a few altcoins so we can get into some of your requests. I know we have Cardano, but we'll wait just a minute or two to see if there are some others we can talk about. And while we're waiting, I also wanted to show the mean age chart is showing there was a big drop in, if it can highlight for me. There we go. So Matic had a big drop in its mean age. So I can go over here. Highlight, so I'll just do it right here. Matic, mean dollar invested age. And check out this big drop here. And I'll also add token age consumed. Make that an area chart so it's easier to see. So there was a massive amount of dormant tokens that moved right at the turn of the month here on August 1st. And so far there hasn't been a huge reaction to it. But typically when you see a big drop in mean dollar invested age, that can kind of be rocket fuel for a price itself, because so many dormant tokens that have been kind of stagnant and sitting in one spot, they're suddenly out in circulation again and can be moved between active addresses again. And that usually is a good foreshadow for prices to rise. Now, it's of course going to depend on whether Bitcoin can start to get its price kick-started a little bit. But in a vacuum, this is great to see. And the token age consumed spike also happened pretty precisely on a leg down, which is another good sign. If you see an age consumed spike happen as prices are on a huge rise, it's usually some sort of profit take by these big dormant tokens. But if it's a very slight drop down, that can be a sign of potential capitulation, which can help prices rise. So I wanted to point that out for Matic, for those of you looking for an altcoin that might have been having some dormant movement as of late. Recently active addresses 24 hours does not increase slightly every day, but suddenly spikes occur. I wonder what this means and how the Santiment team interprets it. Okay, let's take a look at Ethereum really quick and check that out. So we obviously had that all-time high spike here in late July. Things immediately came back down, as you would expect, during the night hours here in the US. We had another big spike and then another big spike just yesterday. This is huge. This is another one that goes all the way up to about 850K. So Ethereum continues to see some major activity right now. I think this in a vacuum is a pretty good sign. If we take this off and just look at the daily one to make it a little more simple. So yeah, I mean, it was a major spike once again. I wouldn't pay too much attention to the hourly in that case, because it's more or less just looking at like the smooth moving average of the day and like when things peaked. But overall, as we saw with this active address spike that occurred right at the bottom, it's usually a good sign on the Ethereum network when you see these big spikes. Even here, this one ended up indicating a big price jump. This one did not. I mean, technically it did for just a few days, but then of course things dropped off again in May. But usually the big spikes in Ethereum are good and can lead to positive price performances. So I'd be pretty happy about that on the Ethereum side. Overall, just seeing the long-term trend, if we put on a 30-day indicator, things have risen pretty quickly. It's back up to an average of about 544,000 addresses interacting per day, which is its highest since right around April 1st or so. So we're looking at about a 4-month high there. So my interpretation is that is a more bullish sign than bearish historically when we've seen these types of spikes occur in the past. It's very interesting, and we're still trying. I think it might be related to the layer 2 optimism for next month, but there could be a lot of reasons for these big active address spikes. It's interesting because they're not really happening with a lot of dormant token movement, because the mean dollar invested age line continues to move up. We did have this small drop here, which was interesting, and prices have gone up since. But overall, the dormant tokens haven't really budged too much. Yeah, if you guys would like to drop any altcoin requests, please feel free to do so. I can definitely give a few recommendations in the meantime. I think Wi-Fi could be a very interesting asset to check out with its major upswing that it had, especially last week. So if I switch to our main template here, and we will look at Cardano next for the person who requested that at the beginning of the call. So circulation, despite this rise here, has stayed pretty flat. It's actually moved down even more. I mean, it's kind of flattened out, I guess, since the spike, but the average amount of Wi-Fi moved is about 469,000 per day. It's not the lowest in the last year, but it's on the low end. So I'd be a bit concerned about that, with this rally continuing to be attempted and not a lot of unique tokens moving while it's happening. Active addresses did peak up quite a bit as the price was rising. With smaller altcoins, I tend to be a bit more weary with the big daily active address spikes. You can see this one occurred at a local top here. This one occurred at a local top here. This one happened as prices were just ending its top, and then they moved down. But it can go either way. I mean, like these spikes here on the bottom, they can often just be reactions to big price swings. But overall, if we just look at the 30-day smooth moving average, it's not looking to be anything special right now for Wi-Fi. The MVRV for Wi-Fi, we see the midterm traders are a little bit overinflated, not severely, but 15% or more is typically the danger zone, and it's sitting at 21%. So that's a concern. Meanwhile, the 365-day MVRV is still in negative territory, like almost all assets in crypto are still, because over the past year, people have been pretty burned. So short-term concerning, long-term looking not too bad at all. Age consumed pretty flat at the moment. Supply and exchanges, after things were moving up onto exchanges through late June, they've actually moved back down ever since. And it's sitting back at about 31% of supply and exchanges. Keep in mind, 31% is very high for an asset, and is a little bit of a concern. I mean, Wi-Fi is a pretty relatively new DeFi asset that hasn't existed more than a couple of years. So it could just be, there hasn't been a ton of distribution yet for the asset, and it can still, because it's a DeFi asset, it's a little bit different. A lot of DeFi can occur on exchanges, but we may eventually see that it starts to decline long-term again. But for now, we saw a big rise up followed by a mild decline down where we're at now. So pretty neutral right there. Quick look at whales. Wi-Fi is obviously very, very high priced at 11K. So we're going to look at the 100 to 1000. Yeah, I would say just these, maybe even this one. So the 10 to 100 tier are basically the sharks. They own about a little over 10% of the supply, and they've been declining ever since the turn of the year into 2022. Meanwhile, the 1,000 to 10,000, these are definitely considered whales because you're talking about all millionaires from here. In fact, 1,000 times 11,000, that's over $10 million held, and they've been declining ever since May of last year. So that's a concern. Uh, However, the 100 to 10,000, these are like the millionaire addresses, and they've been increasing their supply, and they hold about 54% of the overall supply. And I might even argue that the red line is the most important of the three, the million, 1.1 million to $11 million addresses. They've been increasing and holding a much higher percentage of the supply. It's telling that their supply is continuing to rise as the price is dropping. I know there's been a lot of polarization over this asset with Andre Cronje exiting the project. A lot of people thinking it's dead, but then it continuing to see plenty of activity and prices, fluctuating up and down, decoupling happening as it did last week. I want to check development activity. Actually, I think it might be interesting. So yeah, it's certainly not being ignored, and there's still development work going on. So anyone telling you that Wi-Fi is just an abandoned project, this disproves that and shows that there is still some activity happening that shows that there's a team dedicated to improving the asset. And there are plenty of assets that aren't showing any signs of development activity other than like an occasional, GitHub routine activity. This looks a lot better than those. So yeah, I'm still encouraged that Wi-Fi could have a future in crypto. And speaking of development activity, why don't we look really quick at like the top assets that are showing the most development activity on the crypto scene right now. So I'm going to go here and I'm going to just click once on the development activity past 30 days column. And it might take something like 30 seconds. Okay, it was pretty instant this time. So this shows the top assets in crypto in terms of raw development activity on a per day basis. Really quick to show the methodology, GitHub activity. We go here. This was written a few years back, but it's still as relevant then as it is today. It shows when you're looking at development activity, you're looking for whether these people who are working on the project believe the project will be successful, whether it's going to be shipping more features, whether there's less probability the project's just an exit scam, especially this last one. So it may not necessarily, when you see a spike in development activity, it's not going to necessarily like predict that there's just a huge price spike coming, but it at least validates that it's not very likely not an exit scam because people are legitimately working on the asset to try and make it better. If they're trying to just jump out of the project and steal your coins, which sadly that does happen in crypto, they're probably not going to be putting in a bunch of work on the GitHub end to try and legitimately improve the project. So that's kind of why we have this metric and why it's so important. And Santiment proudly is the only platform we know that offers this kind of data, where we not only just scrape the amount of GitHub submissions, but we're looking at like the notable GitHub submissions and ignoring like a routine Slack update that sometimes shows up as a number on GitHub. And it can be really telling. It's no coincidence to see that, the top up until the 14th asset, all of these market cap ranks, I shouldn't have clicked on that, but all of the top market cap ranks other than status, their top 50 or so, 52, I guess top 100 or so assets in crypto. You're not going to see a lot of like 1,438th ranked asset up in the top developed assets because development activity leads to rising prices over time if given enough time to elapse. And they usually are the ones that the community latches onto the most and believes in because they're innovating and coming up with new ways for the blockchain technology to improve currency and transactions. And that's why all of these different altcoins exist with very vastly different purposes. So we look at something like Cardano at number one with 429 daily GitHub submissions. That's a very good sign for Cardano, despite the prices being kind of stuck in the mud for so long for that asset. You know, the people that are holding strong with it, they can be encouraged by the fact that it is still by far the number one developed asset in crypto. Right behind it, Ethereum continues to be quite dominant. It actually, I think it was at like the third, fourth, or fifth spot. So Ethereum has likely been rising in development activity as of late. I'm just curious. Yeah, absolutely. So I don't think it was at number two until recently. And especially over 2022, it's shown a nice rise here, continuing to move up. And it's back to its highest levels since October 2021. And this was right before its all-time high. Take that with a grain of salt. Like I said, development activity shouldn't be considered like any sort of immediate alpha for you, but long-term wise, when you see an asset, you know, looking at the all-time high, the all-time time frame for Ethereum, you're going to feel pretty happy with an asset that's continuing to see larger and larger daily development activity happening on its GitHub. A few others that we can look at. Here we go. So Ethereum, Cardano, Ethereum are number 1 and 2. Polkadot and Kusama, they share the same GitHub. They're at 3 and 4. Flow is sitting at number 5. Status, Cosmos, IOTA, Decentraland, and Internet Computer round out the top 10. So that's just a quick update there. For you Chainlink fans, it's sitting at number 12 as well. Quick check on the chat. Okay. Yeah, I'm just going to jump right into Cardano here then. So Cardano, let's look at the last 6 months. Circulation continuing to drop, nothing special going on there. Daily active addresses, there might have been a blip for a couple of days with missing data, but overall it looks like it's continuing to drop. So on the utility side, not looking great. If you're looking for a sign that Cardano is finally about to pick up steam, we're not seeing one on the utility side of things. However, MVRV, we discussed at the beginning of the call, it's one of the better looking ones because it's only up a mild 4.5% over the last 30 days. And on the 365-day MVRV, it's still way, way below water at negative 50% or so. And that there's a long way to go for it to get back to 0%. So the long-term traders should be feeling pretty comfortable knowing they're in a spot with much less risk than usual. We'll go back like 3 years for Cardano, and I'll take off the 30-day for a minute. So typically when things are high, we typically see price tops occur here, here, and here. When things are low, that's when you see price bottoms and prices tend to rise up. Even here, we saw a nice rise up when it got below negative 40%. Now it's just about at negative 50%, and it's still trying to make up its mind as to whether it can finally lift off the ground. I think it's a matter of time for some of these assets that are seeing such low 365-day MVRVs, but it's all going to depend on, you know, Bitcoin being able to stabilize out and show a little bit of promise and not just stay flat on its own. Age consumed, not a ton happening there. Supply and exchanges, I don't think we have data for that. Cardano's whales, however, we definitely do. Let's take a look. With the price at about 51 cents, we can probably check out the 100,000, 1 million, maybe 10. Nah, I think that's probably a little too low. So we'll just look at these two for a minute. Over the past 3 years, both lines have interestingly been moving down. This means it's going to be taken with a grain of salt, because obviously it's tough to say there's a lot of alpha in the whale tiers for Cardano when they've been moving down huge since the beginning of 2021 and prices were still able to rise. Now, we did see the yellow line here, see a big uptick in July of 2021, and that helped spurn Cardano to an all-time high there in September. So we do like to see that there are upticks in the yellow line as some leading alpha, and there are just a few breadcrumbs going on indicating that there's a rise happening once again. I'd take it with a grain of salt, though. I mean, we saw a very similar one happen from late June to early July that didn't really amount to much for Cardano at all. So yeah, I would say, in a vacuum, there's not too much special happening with the whales right now. Not much on the exchange network realized profit loss. Development activity, like we said, it is the leader in daily development activity. So that's great to see. Social volume and dominance. It doesn't look like there's too much special happening. Social volume has stayed pretty dormant. Dominance also dormant. It's not really moving down or up right now. If we started to see it really trickle down, that could actually be argued as a good thing, because it's being ignored as a top 20 asset in crypto. It's being ignored so heavily that when prices do rise, it would happen with much resistance, and that can be pretty ideal. But for now, not much to say there. Weighted sentiment, it is starting to veer into negative territory again. It was actually showing a little bit of positivity as prices were rising in mid to late July, but quickly moved back negative as prices were topping. It went through a very long stretch here of negative sentiment where it really just didn't make a big difference. Eventually, at the very tail end, when it got super negative, almost one below standard deviation, that's when you saw the big price bounce occur. So that was good alpha. The big euphoric spike happened at a top right before things dropped off a cliff. So that was good alpha as well. And right now, we're just going to see how much this week can elapse and whether it'll stay negative or it'll start to turn back toward neutral. And it's just a short sample size right now. But in a vacuum, better sign than usual that things are this negative right now. Not much going on the ratio of daily on-chain transaction volume and profit to loss. We are seeing a mild amount of profit taking happening right now, but I wouldn't call this too much of a concern, even though it is its highest level of profit taking since March. We just need a little more time. If this was a full bar, I'd be a little more concerned, but it's too short of a sample size right now. Whale transaction count, very interesting to see that it just continues to stay low. Again, I think there might have been some data outage at the very end of July, but overall, I mean, we can see that the amount of transactions that are valued at $100,000 or more is staying very low right now. So there's just not a lot of interest from the whales going on. The big spike occurred on the big drop off in mid-May, and there was a nice bounce that occurred right after that happened, I should say. And not a lot of dormant token movement either. It's been moving up steadily since early May, and the average days in which tokens have been sitting in wallets is up to about 262. It hasn't been this high since. We'd have to go back to July of 2020 or so. So we're looking at about a 25-month high in mean dollar invested age where lower is better. Notice how things started to trickle down here in November all the way up until February. And during that time, when dormant tokens were being moved, prices were just going nuts. And we saw a price peak at, Cardano just moved up a casual 1,151% during that stretch where there were dormant tokens being moved. So very clearly, that's what we want to be seeing for prices to justify going up significantly. And yeah, that's pretty much it for Cardano, guys. Okay, we'll look at looks really quick and then we will call it. Let's take a look at looks. So looks rare. We will zoom in because it's a relatively recent asset. Circulation, not a lot happening. It's been moving down in late July and early August. Daily active addresses, same thing. It's interesting, we had this huge spike in April that's just dwarfing the axis. Let me see what's been happening after that spike. Yeah, less and less daily active addresses. So not exactly ideal for looks. As of the last full day, 530 active addresses. It's pretty much around its low like it was seeing in late June and early mid-July. See if we have non-intraday MVRV. We do. Okay, so 30-day MVRV is sitting right around neutral. This is actually better than most assets, which, as we saw, were anywhere between plus 4% all the way up to like plus 30, 35%. But looks is only at plus 1.5%, so it's more or less neutral right now in terms of the average trading returns. So as far as altcoins go, this looks to be one of the better midterm opportunities due to it not being too inflated. And on the more long-term scale, and it might be a little bit tough to interpret because it's such a short-term asset, but the 365-day MVRV is sitting at negative 80%. Like I said, grain of salt with it being such a recently added asset to the crypto sphere, but negative 80% shows that the traders who have been in here for the long term are down massively. And eventually, assuming looks continues, being traded at a regular rate, it should eventually move back up to 0%. So there should be some positive price movement at some point, or at least not a further downswing to allow the 365-day MVRV to get back up to 0% as all assets see for any time frame. Nothing really happening on age consumed. Supply and exchanges, it's relatively low for looks at only about 4.5%. So that's a good sign, not a huge risk of some major sell-offs occurring. Overall, the trend since mid-July, it has been moving down some. So I'd call this, a bullish sign. It's good to see that the supply is moving toward cold wallets rather than back onto exchanges. As far as whales go, so obviously with it being a pretty recent asset, I'd expect a great deal to be in the top wallets, which they are. 88.5% are held by 10 million or more looks addresses. But the next one's down. We can see the 1 million to 10 million tier is moving up a little since early May. So the past 3 months, it's gone from 2.9% to where it sits now at 5.5%. So that's a pretty nice sign, in my opinion, to see that the 1 to 10 million addresses are believers in looks for the long term. And the step down below that, same thing. If you look back all the way to 6 months ago, they were holding 1.1%. Now they're up to 3.5%. I think that's great to see as well. Exchange flow balance more or less neutral right now. Network realized profit loss is neutral. Now we talk about assets that don't have a lot of development activity. This would be one of them. Looks is barely lifting off the ground most days in terms of innovation and improvements from their coders. I would call that a bit concerning. I don't know as much about Looks as some other members on the Santiment team, or probably the person who requested it on this call. But I would encourage some further research into what they're doing with Looks long term and whether or not it's intended to be innovated or potentially be forked into something else. But for an asset to have such low development activity, I would be worried unless we're somehow pulling from GitHub and they're actually on GitLab or something. But usually, if that's the case, it's just going to be showing zeros the whole time. So, yeah, I would in a vacuum be very worried about that. Social dominance and volume. Ever since this big spike on July 7th, it's been coming back down, and it's being talked about less and less over the past 6 months. So not necessarily a bad thing. When things are under the radar, prices can rise. But watch for any big social dominance spikes, either as prices drop or as prices rise, or because that'll very often signify a big price direction change that's about to occur. Weighted sentiment, we are dropping into a pretty big negative territory this week. So that could be a good thing. It looks like there might be some non-believers forming for Looks. And then the ratio of transaction volume and profit to loss, it's actually showing that there was a pretty big spike just to begin this week. The highest we've seen in the last 3 months at least. If we go back a year, yeah, it's the highest spike thus far since late March. Like I said with Cardano, though, take it with a grain of salt because this is a short week so far, and we need some more time to progress to give a larger sample size on this ratio. But overall, we'd rather see the ratio of profit to loss be down low than up high, because that means profit taking could be happening to push down prices or at least keep it suppressed. Yeah, I think with that, we can close out this week, guys. I really appreciate you all for joining and checking out the stream. We're going to have to continue monitoring, things like that MVRV 30-day for many assets compared to the 365-day, which is looking a lot better. One's got to give a little bit, and that's why I think something like this MVRV model can be really valuable, because it cuts through all of the different time intervals and averages those divergences together. But for now, on behalf of Max Balrash here, thank you as always for running the stream. I wish you all a great weekend, safe trading, and stay safe yourselves. I'll talk to y'all soon.